अच्छा
देखो संभल के, देखो देखो आगे देखो, छोड़ दो उसको। क्या क्यों नहीं आ रही है?
अपने आता रहेगा।
अच्छा चलिए। हाँ,
So, Namaskar. I am Vimal Bhatt, former Chairman Managing Director of TCIL, a Government of India enterprise. I welcome you all to today's event of Public Police NGO. We at Public Police NGO are planning to start a webinar series on the topics which are of immediate concern to the general public. Our first topic in the series is how safe and secure are our bank deposits. The common man in this country has been at the receiving end always. Even after independence, people have burned their fingers trying to secure their hard earned money. There have been chit fund scams. The stock markets have wiped off investments of a large number of small depositors since 1992. In the last decade, the reality sector has let us down, and still it's not recovering from the shock. So, a large number of small time investors, including pensioners, after reposing their faith in bank deposits, still they have also been in for a shock. There have been several cases of failures of public, private, and cooperative sector banks in the recent past. While some of the banks, including the private sector banks, like Yes Bank, have been bailed out by the government, the sword is still hanging uh, over the small time depositors. Any amount of deposit in a bank would be compensated with an amount of 5 lakh rupees as a part of insurance through Deposit Insurance Credit Guarantee Corporation. But it's no consolation to anyone that this amount has been raised from a paltry amount of 1 lakh to 5 lakh in the recent past. The investors continue to be apprehensive. To add insult to injury, major public sector banks have reduced the fixed deposit interest rates below 5%, thus sending a message that they should look for investments elsewhere. There have been suggestions that the government of India should guarantee the safety of every investor, uh, whether in public, private, or cooperative banks. For this, a commercial insurance scheme is one of the options which could be commercially viable, considering the volume of the number of depositors in a country like India with a population of 1.37 billion people. The objective of today's webinar is to deliberate on these and related issues and to propose a roadmap to the Government of India. The panelists on this webinar today, we are lucky to have Sri R.M. Malla, former CMD IDBI Bank, Sri Vinod Juneja, former CMD Bank of Rajasthan, Sri Devdatta, ex-IS and former Banking Secretary, UP Government, Sri K.N. Bhandari, former CMD National Insurance Company, and Sri D.D. Maheshwari, ex-General Manager, Bank of Baroda. Of course, we would be missing Justice Mukul Sharawat, who was supposed to be participating, but due to some emergency has not been able to make it. To make the webinar more interactive, I'd request the participants to pose their questions in the chat box so that they can find the answers during the course of this webinar. To begin with, I would request each of the panelists, and I'll focus attention on each of the panelists, and I'll request them to be within 2 to 3 minutes for this. And of course, I'll request the rest of the panelists and the participants to put their mics on mute so that we can hear the speakers properly. So I'll start this first round with Sri Devdutt. Of course, as a journalist and a retired government officer and also a common citizen, please express your opening remarks about this whole issue to set the tone for the discussion. Thank you. Devdutt sir.
Welcome to all the panelists. and all distinguished guests who are joining this webinar. This is a very, very important subject which has been taken by Mr. Baklo and other senior colleagues. As you know that we had a 1 hour direct live telecast on APN News channel, and we had discussed this issue in detail.
My request to all panelists is, and all the participants, please keep your mic on mute, except for the speaker at that point of time. Thank you.
So,
Yeah, please continue.
can I continue now?
Yeah, please continue.
So we had discussed this issue in detail when we had a panel discussion on APN News channel some time back. And we had come to this conclusion that our priority should be bank's customer who has put in hard earned money in different banks of rupees. As you have rightly said, that in case of Yes Bank and other banks, other cooperative banks, if the bank is not able to pay amount because of certain reasons, then the customer is totally at loss. So we had made a suggestion to Government of India, especially to Prime Minister and to Finance Minister and uh, RBI Governor, that this amount, any amount, whatever has been deposited by any depositor in any bank, must be ensured. And prior, in my personal opinion, bank must pay the insurance money. And if it is at all not possible for the bank because of the financial crisis which is going on in the banks, as we are reading newspapers, then it may be charged from the customer who has deposited the money, but the money should be safe, and whenever he wants, the money should be available for the disposal of the depositor. So I am for the depositor, that anyhow the government or the bank or RBI must ensure that the money of the depositor must be safeguarded, and at any point of time, if he wants to withdraw the money, like if we have gold in our hand, and if we go to the jeweler, we get the cash immediately. So same thing must happen in all the banks. If I need money for my immediate needs like medical or for my uh, children benefits or any other reason, so I should not be deprived of my own hard-earned money. This is my submission in the first round. Hello? Hello?
Yeah, thank you, Devdutt sir. And of
Thank you.
course, we'll come back to you soon. My next question is to Sri R.M. Malla. I mean, does it make sense for the government to guarantee full refund of money to the depositors, particularly from the Consolidated Fund of India? I mean, that is scaring some other people other than the depositors. What's your view on that, Malla sir?
Thank you very much, Mr. Waklu. I must compliment Public Police for organizing this seminar. And as our patron, Mr. Devdatta, was saying, we also had a function on this issue at APN, which was well attended. Now, coming to your specific question, Waklu Saab, let me put things in perspective. We have roughly about 150 lakh crore worth of deposits. Most of it is in public sector bank, private sector bank, and part of it is also in cooperative banks. Then we have non-bank finance companies and then other companies also. Now, everyone's heart goes that whosoever has saved money must get it back as and when he wants. Now, the first step, we must understand that in any capitalist country, And under a contract act, let the buyer beware. If someone is putting his money with someone else, he is the person who
Hmm,
should decide where to put, how much money he puts, and the risk
hmm.
actually is his own. But since we
कितने
have
बजे?
most of the countries who are welfare countries, in most of the countries of the world, in order to protect small depositors, there is a scheme of deposit insurance. Similarly, Mr. Waklu mentioned, we have an organization called Deposit Insurance and Credit Guarantee Corporation. It's a 100% subsidiary of Reserve Bank of India, and it insures all depositors per depositor per bank 5 lakh rupees as on date. Now let's take it in the perspective. If suppose entire 150 lakh crore, which is today, is to be insured. Now that organization, in order to insure 150 lakh crore,
वापस आ रहे
should
हो?
have a capital of at least 15 lakh crore.
ठीक.
Now who will put this 15 lakh crore? And in order to put a equity of 15 lakh crore, it should make a profit of at least 10% post tax. So that means it should earn 1 lakh 50,000 crore. And pre tax, it will become something like maybe 2.5 lakh crore. Now, this is the amount of premium which has to be paid annually, either by the bank, as Mr. Devdutt was saying, or by the depositor. And Mr. Waklu also mentioned that the rates of interest today in fixed deposit is about 5%. So if you reflect that if depositors have to pay this, it will amount to something like 2 or 3% of its interest. So instead of getting 5%, you will start getting 2%. Now, is it feasible? Because it can be feasible only if all agree to pay or some of us agree to pay. So that is a very confusing situation. So what is happening today is nowhere in the world deposits unlimited are insured. So steps are taken that only the small, and when we say 5 lakh, it's a small amount, but at the same time, almost 90 to 95% of depositors get covered. So in the last seminar also we felt that probably we can make a distinction that all individuals, especially those who are beyond 60, they can be insured fully. Corporates, trading companies who have their deposits need not be insured. But without taking much more time, I'll only respond to what Mr. Waklu asked, whether consolidated fund can be used for this. So it is not possible because consolidated fund budget allocation, we can only contribute equity to a guaranteeing organization. For example, Government of India can decide that they can pay 5,000 crore rupees to deposit insurance credit guarantee as a equity. That's all. But government cannot take a responsibility of ensuring 150 lakh crore, because government also, if it gives guarantee, it is non-fund, so they have to provide some money for that. So that is practically not possible. But I'll take only one step backwards. That one of the major thing which happened in this country was bank nationalization in 1969. And after bank nationalization, not a single depositor has lost any money if he has put in public sector bank. Then from 1980 onwards, not a single depositor has lost any money, even if he has put the money in a private sector bank. The credit goes to Reserve Bank of India because they have been taking timely action. So no depositor has lost any money when he puts it in either public sector bank or private sector bank. Of course, people have lost their money if they put in cooperative banks. So
Thank you,
this
sir.
is the
Yeah.
this is the scenario as on date. Thank you.
Thank you, sir. Uh, Now, before I go to Mr. Bhandari on the insurance part, which we are discussing, I would like to ask Mr. Juneja why have the banks recently reduced their rates of interest on FDs, which is severely impacting the savings of small-time depositors?
Vimalji, your answer is very pertaining to everybody because in India, lot of people put their above 60 retired people put their money. Even the inflation rate is not covered by the way of the interest, but only reducing is banks has got nowadays surplus cash, bank has got nowadays surplus funds, and there is a no deployment of fund because in last Corona's time there is a no new industrial activity has come. The banks has got both because if they take only deposits, whether it is in the form of saving bank, fixed deposit, current account, cumulative deposit, or any other form, but unless and until they deploy these funds, ultimately you see what is the bank. Bank's raw material is what? If there is the industry, it has got raw material, is some rubber, some tires, anything is there. For banks, raw material is a cash, if liquid cash. If banks' raw material is not consumed by the industry, not taking over by whether it is a industrial activity, developers, or it is export, import, whatever is there. So I think the rate of interest will be further because it has got nothing to do with the inflation of inflation is the rate of because inflation is going too high. So I think your question is very valid, and banks will continue to hit the rate of interest further if there is a no deployment of the fund. This is my small reply or a clarification to Mr. Bimal to your reply why the rate of interest is so coming down so low in the country.
Okay, that makes us sort of give some sort of assurance that when the economic activity picks up, things might improve further. Yeah, thank you. Now, my question to Mr. Bhandari. As Malla Sahab has mentioned, that it's not commercially viable at present to ensure the deposits of the citizens. Since you have been with the insurance industry, is it possible to package it in some way that the deposits of the investors can be protected and at the same time the insurance company also makes money? Mr. Bhandari. Bhandari साहब आप सुन सकते हैं क्या? Yeah, I think we have missed him somewhere. Acha. Okay, still we get Mr. Bhandari back. We'll come to Mr. D.D. Maheshwari. You know, one of the challenges which we have faced recently and with the cooperative sector banks also, it applies to even public sector banks. It looks like the banks are doing too much of window dressing in their balance sheet accounts. How are they able to manage that in spite of an independent regulator?
Good afternoon to everybody.
Yeah.
This question, it is right that Reserve Bank, Finance Ministry, and all other organizations are there to regulate and to supervise the banking operation. But you know what happens? Going into deep in each and every balance sheet is not practically possible even to the bank which is sanctioning the loan rather than for the Reserve Bank of India. So the general public, rather I will say those who are taking loans from the bank, they are not showing their balance sheet properly. Chartered accountants, consultants, they are playing role for getting the loan. This we have seen, especially during last 5-6 years, when after 2015, quite a large number of NPAs which were not shown earlier came to light. And not only they came to light, a large number of frauds has taken place. So it is lack of supervision on the part of individual banks as well as the loanee. Secondly, one of the major reason may be the government popular policies. Say when we are guided by the government to sanction the loan, in spite of whether the person deserve or not. The recent example of 20% additional working capital limit, even without seeing the security aspect, I am afraid that might be after few years, most of the loan accounts may turn into non-performing assets. So what is important that whenever loan is sanctioned, the cash flow, the generation of the income, whether in normal course, that unit will be able to refund the loan taken by them along with the interest. That is more important. And periodically, supervision of each and every loan account should be taken care of, and wherever required, rather than taking corrective action when the money has already gone, it should be timely done.
Yeah, thank you, Maheshwari sir. There is a point raised by. I'm sorry, Bhandari sir, we missed you. I'll come back to you, but before I do that, because Mr. D.D. Maheshwari raised the issue about the chartered accountant's role here. I find Mr. R.K. Maheshwari, who's a chartered accountant, I would like to have his comments also. A quick comment of less than a minute on what he feels the fraternity of chartered accountants can do in this direction. Mr. R.K. Maheshwari, I think we have missed him. In any case, then I'll start with Mr. Bhandari. My question to you was, why is it not currently commercially viable to have an insurance for protecting the deposits of the citizens? With 1.37 billion people in the country, a bulk of them being bank customers, why can't there be a commercial package? As Mr. Malla has mentioned, that it does not look commercially viable. So since you are from the insurance sector, you would be able to comment more on this, whether it's possible to package it in some particular manner. Thank you.
Thank you, Mr. Vaklu. I would respectfully disagree with Mr. Malla. The premiums are not calculated on the basis of the total deposits and the total loss of all the deposits at a time. Premium for this kind of insurance is calculated on the basis of the past record. How many bank failures have taken place? How much money has been lost on account of the failures of the banks? So there are two questions. One is that it is entirely feasible and possible to insure on the basis of the losses which have taken place, and policies can be tailored on first loss basis also. So I think it is entirely commercially feasible for this. And if you do not have capacity within India, there is a huge reinsurance market. There is a global market to support if you are willing to have an insurance cover. And it should be possible to do so once we decide that we need to protect all the deposit holders. Secondly, I think basically the issue is that the NPAs and resultant failure of the banks is a regulatory failure. Cooperative banks have now been brought under the regime of the RBI's regulations. And I think we need to look at the regulations to see that this does not happen. Mr. Malla also mentioned that there are about 95% share depositors whose deposits do not exceed 5 lakhs of rupees and they have been fully paid, that there have been no failure in the public sector banks. So if you take a percentage of the total deposits and the failed deposits, you will find that this is really not a very huge problem. And the current margins which are being allowed on the deposit rate, on the lending rates, I think if a fraction of it is earmarked for the insurance, it should be possible to have an insurance cover for all the depositors. And this should be done.
Mr. Maheshwari, there are some people who express their apprehension that it has not been done anywhere in the world. What's your view on that? Because this deposit in the banks, their general belief is that it has not been done anywhere in the world, and so re-insuring this will also be a challenge.
Is it to me, Maheshwari?
No, sorry. This question,
R.K. Maheshwari.
Bhandari, I was mentioning about the issue he raised in response to Mr. Malla's point.
Yeah. Now, can I respond to that, Mr.
Yeah,
Vaklu?
please.
You see, we are a domestic saving-driven economy. And most of the economies which are being taken into account are not saving-driven economies at all. Now, if you really want the domestic savings to go into productive use, then you need to encourage savings, and you need to encourage savings by ensuring that savings will not be lost on account of the failure of the banks. So I think a comparison between India and the credit-driven economies and saving-driven economies perhaps would not be correct.
Okay. Thank you, sir. My request to all people, please, except for the speaker, please let's all mute our mics. Because
moreover, Mr. Maklu, we do not have any social security system.
Yeah.
The deposits in the banks have basically been to provide a social security, a financial security for the old people, for the people, senior citizens, out of their hard-earned money which has been saved by them. So if you compare the credit-driven economies with the saving-driven economies, I think we would probably result in mistaken conclusions.
thank you.
We need, because in absence of social security, I think we need to encourage savings so that the people can fall back on their savings when they are not earning.
Thank you, sir. Now, that brings me to the second round. Malla Sahab, the discussion, it emerges that one of the major challenges why this is happening is due to the bank failure. Why do the banks fail? Why are the individual customers being treated as the least important stakeholders who nobody seems to be concerned with? I mean, when it comes to cooperative banks in particular, of course, now they've been brought under RBI, but what was the thought process when these cooperative banks were set up and with no security at all?
Okay, thank you very much. But before I answer this question, I totally agree with what Mr. Bhandari said. It is possible. Then my question is, if it was possible, why insurance companies in India never thought of this business opportunity? I mean, this itself proves that probably there was something missing, but I'm very happy if someone can even still think of. But what is most important in any insurance business is the credibility. And more often for such a mammoth thing, the credibility will come only if it is either in public sector or is backed by government. That is how Deposit Insurance Credit Guarantee Corporation was also, is 100% subsidiary of Reserve Bank of India. Then there is another question. The question is whether there should be 100% insurance or insurance should be left to a person who wants to insure himself. It's a classical example. Railways used to get all its assets insured from insurance companies. And one day they realized that they were paying 100 rupees premium. And whenever there was a claim, the total claim was 30. So what is more important is let's do self-insurance. I mean, if there is a loss, we will bear it rather than paying premium, which is much more than what is likely to come to us in case of loss. Now, coming to your second question, you see, as far as public sector banks are concerned, the very nature of its being, owned by the government, which has a perpetual credibility, no public sector bank has failed. But what has happened is that, the some of the assets have become non-performing. Now, what does non-performing mean? Non-performing does not mean it's a fraud. Non-performing doesn't mean that someone has cheated. And banks are, one of the engines of growth of any nation. If most of my colleagues on the panel are in the range where we can easily remember what happened in 1947 when we became independent. We were not even able to manufacture a needle. Even a needle used to come from China. I remember my mother buying that black color with the needles made in China. From that day to this day, when we can even create, I don't know how many of us remember, entire fertilizer was imported, entire food grains were, or most of food grain was imported. Our total power generation capacity when we became independent in 1947 was 1500 megawatt. Now we have 3 lakh megawatt. Now you will find place within 1 kilometer where 5000 megawatt is being. So all that has happened, of course, because of entrepreneurship, because of backing of government, and also to a large extent by the banks and the financial institution which took risk. Now, when a country is growing at the rate of 10%, there is a bullishness. Everyone wants to set up projects. But when it goes down globally also, and India being a part of the global, the GDP goes down from 10. The road estimate is we'll have 1 lakh vehicles going. But when it becomes 5, 1 lakh becomes only 50,000. As a result, the cash generating capacity of the industries or infrastructure projects becomes half. And when it becomes half, now there are two options. He stops paying to the banks. So obviously the banks will treat it as NPA. NPA means that person is not able to pay whatever he had committed for 90 days only. 90. So it's a global phenomenon. Now we cannot find fault that everyone is fraud. There may be few who are fraud, but we must also realize that our country has now become almost 3 trillion economy. So now coming to public sector and cooperative bank was a great phenomena where it was felt by the nation that individuals should join hand and be part of the prosperity of a nation. We have wonderful examples. Amul is an example. IFCO is an example. Kripco is an example, positive example. But unfortunately, as far as cooperative banks are concerned, because of certain individuals, because of certain geographical reasons, because of certain reasons, these cooperative banks do fail, which is very unfortunate. And since they were under state government regulation, so obviously a central regulator like Reserve Bank didn't have much say. Fortunately, now it is coming under, there are almost 90,000 cooperative banks in this country. So obviously, some will fail. Many more will continue to, and if my figures are correct, roughly depositors to the extent of 3 to 400 crore per year lose in cooperative banks. Now, where is 150 lakh crore and where is 400 crore? So that's a very small amount, but it comes in the news. It comes in the news and people, catch on the negative news. It should not happen. Gradually, it may not happen. But let me tell you, as long as we continue to grow, inflation, economic cycle keep on going up and down, we will continue to have NPAs, and NPA within a range is actually a good thing because then it is known that banks are taking risk. If there is a zero NPA, believe me, that country will never grow, because then the banks are risk averse. Everyone is risk averse. If everyone is risk averse, then we cannot have large infrastructure projects. We cannot have airports. We cannot have roads. So
Right.
this is my submission at this stage.
Thank you, sir.
Mr. Vaklu, I would like to make a small point on what Mr. Malla said. Can I do that?
Please tell.
Mr. Malla mentioned that the average loss on account of the failure of the banks in the country has not been more than 300 or 400 crores. Now, that's precisely the point I was making.
I
That
think
we,
he was referring to the cooperative banks.
whatever it is, I mean, if the total on account of failure of the banks, if the people have lost, on an average, we have not lost more than 400 crores every year. If you take the reckoning for last 10, 15, 20 years, the total loss would work out to 400 crores, 500 crores. So insurance cover is in fact required only for 500 crores, not for 1,50,000 crores.
Yeah.
The risk element is only 500 crores. And to carry or spread this risk amongst the depositors, which contribute to 1,50,000 crores in the deposit insurance, only a fraction of the interest which is being paid to them would be required to insure this 400 or 500 crores. Credit insurance is a global phenomenon. Credit insurance is being done in all the countries. Among the two private individuals also, the credit insurance can take place. Most of the commercial establishments are run on credit insurance basis. So it's not a new phenomenon. The only thing is that this has to be enforced. And there the regulator has a role. If you are calling that these are scheduled banks and regulator says that I have no responsibility for your deposits, then I think the very purpose of having regulations is defeated.
Yes.
Why do we need
No,
regulations?
Yeah.
Now, I would like to correct, because you know what I said, Bhandari Sahab, as far as Deposit Insurance Credit Guarantee Corporation is concerned, it is ensuring all deposits in this country, all deposits, 150 lakh crore, subject to maximum of 5 lakh per person per bank. Per person per bank. So which means, suppose ONGC has a deposit of 20,000 crore in, let's say, X bank. I don't want to name any bank, X bank. And if that X bank fails, then ONGC will get only 5 lakh rupees. But it is ensuring all cooperative banks also. When I said that 400 crore loss, even that 400 crore Reserve Bank's subsidiary DICGC has given to Punjab Maharashtra Bank. But if a depositor in Punjab Maharashtra Bank had 15 lakh rupees, he will get only 5 lakh rupees.
So that is what Mr. Malla I'm saying. That why insure it for 5 lakhs? Why not for the whole amount? The total loss is only 400 crores.
No, fine. So the Deposit Insurance Credit Guarantee Corporation, person who will value as a insurance, you have that valuer, the general gentleman who you know what is called that annuity calculator or that annuity. He will say today the premium is 12 paisa per 100 rupees. All banks, cooperative banks, everyone pays 12 paisa per 100 rupees. So he will say if, because as per your earlier statement, you know that calculation of loss, what has happened in the past, they have come to a figure of 12 paisa. But if he has to ensure unlimited, that means if X bank fails, ONGC will get 20,000 crore, not 5 lakh. So this 12 paisa will become 4%. That is the problem.
Sir, can I?
Well, I think we'll come
Mr.
back to
Vimal,
this issue.
Mr. Vimal, can I just clarify one small point?
Vinodji, boliye.
Dekhi, sir, what our two learned ex-banker, Mr. Malla and Mr. Kailash Bhandari, both are correct on their respective side. I agree with the both logic and other thing. I only want to mention one or two small points. You see, in Indian banking system is, number one, is fairly strong. Even when 2001, Asian crisis came where most of the Japanese, Korean and other banks, Indonesian banks were in problem. Indian banks were good and they were able to make. Then came 2008-9 Lehman Brothers, which whole things were shaken up, whole world. Indian banks were able to survive. And I'm sure Indian banks will still survive. Now again, we are coming to the basic seminar for which you are talking. Number one, how our individual depositor in this country is able to have the deposit, because now today we all feel that 5 lakhs rupees is a too less amount, because people are after the pay commission, their salaries, their income. If we keep this deposit, we are, because why this happened? Recently, all the banks, government has giving them money every time, their equity, and banks has got, two types of capital. Capital A and capital B is, which is called the quasi capital, which comes by the way of bonds, which by the way of some other deposit comes. Now, tier 2 capital, which is more important, are the bond. If you recall, Mr. Malla, when was the chairman of IFCI, what Yes Bank has done, and Lakshmi Vilas Bank, all the, in Yes Bank, all the bond holders were getting money. In Lakshmi Vilas Bank, it has become zero. Now, the major question is, I recall when Mr. Malla was the IFC chairman, he was able to pay all the bonds holder money in spite of only what Mr. Malla has done, the rate of interest reduction. If your bond is for 11%, it has been reduced to 8%, 6%. Not the, otherwise it would have been zero. That is another point. You see, today we are not only investing in the bank's fixed deposit, we are all investing also in the bank, other tier B capital, tier B capital bonds are coming. So it is very important for us to see that we should not talk about deposit. And the last and most important point which is coming is the cooperative banks. Now the cooperative banks under the new head has come to the Reserve Bank, but still people are very much scared of the cooperative bank. Money is losing. But you cannot forget, in this country, it is the cooperative banks which are going to poorest to poor. It is not the nationalized bank. It is not the private sector bank. It is not the other banks. It is only the cooperative bank. So cooperative, as long as Indian banking system will stay, state cooperative bank, district cooperative bank, and the multi-state cooperative bank, all will have their stake, all will have their share. So we have to take some point that people who are depositing in cooperative bank should able to get safer, their money is safe as you are safe in the nationalized bank.
Mr. Juneja, that brings me to another point. I mean, of course, now that the good news is that all the cooperative banks are under the ambit of RBI now. And why doesn't RBI appoint a watchdog leveraging big data analytics, which can provide it continuous feedback on defaulting banks so that it can take a corrective action on time? Because the reason for this is that the banks don't fail in a day. It takes maybe months and years. So, but if there is a continuous feedback available to the RBI leveraging technology, why can't we prevent such failures? Because there are some moles everywhere uh, who are responsible for such failures. We have seen what happened with some of the nationalized banks also recently.
So, Mr. Vaklu, one point I also wanted to make was that
Bandari Sahab, I'll
yeah,
just come back.
Right.
Juneja, can you comment on this?
You see, I am not, there's been no comment. You see, what you are mentioning is now with the new role of the RBI in the state cooperative banks and other things, one has to take the most pertaining point is there in this country. We as a public police, our job is only to see that all should get the money safe. But I of the opinion that the role of the cooperative bank and the Reserve Bank role has to be watchdog. They are a watchdog. RBI is doing their job very well. RBI is a good supervision. They are doing it, but they have to have some more strict vigilance as far as the failure of the banks are concerned. RBI, otherwise, one of the good regulator, and I think they are getting a good response from not only appreciation from the India, they are getting from the World Bank, ADB, and all. But still, as far as the cooperative banks are concerned, as far as some private sector bank is concerned, RBI has to be more strict and RBI has to be more vigilant.
Thank you. Actually, Bandari Sahab, before you start your point, I just also want to club one more question with that. I mean, is it possible for us at Public Police to give a proposal of a commercially viable insurance, you can say, model to the government? I mean, under your leadership.
Yes, Mr. Vaklu, it is possible and it can be done. Number
Yes.
one. Number two, you see, the anomaly is very apparent. I can put 50 lakhs of rupees, 5 lakhs of rupees each in 10 banks and get myself insured for 50 lakhs of rupees. But if I put in one bank 10 lakhs of rupees, I'll get back only 5 lakhs. I can diversify my deposits in 10 banks, 5 lakhs each, and I can put 50 lakhs of rupees and get insured.
I'll tell you another interesting thing. You don't have to even diversify to 10 banks. It is per account holder per bank. Earlier, it used to be per branch. So in the same bank, if you go to 4 branches, you could. But today it is, I'll suggest all my friends who are senior citizens to do following. Number one, open an account up to 15 lakh. Your rate of interest is 8%. Thanks to government, that scheme is there. So up to 15 lakh, you can get 8%. I think it is still 8%. Number two, open a second account with you alone. Open a third account in the same bank, same branch with your wife as another joint holder. Open yet another account with you, your wife and your child as third account. So all accounts are insured for 5 lakh. So till Mr. Bhandari gives a proposal and a new insurance company is brought, you can do this. It is well within the law.
So, Mr. Malla, we can beat the system. We can beat
No,
the
it is
system.
not beating the system. No, it
But
is not beating the
why-
system. It is not beating the system. The law says when you are an individual account holder, you as an individual, but once you become husband and wife, the wife also comes. So it's a different account. Like HUF is different from individual. So when it is husband, wife, and child, it is yet another constitution.
I think
You know,
in
so
the short term,
please do that for the time being.
thank you, Mullah Sahab. I think in the short run, it's a good solution for senior citizens like us. I mean, it's a good solution. But of course, I'll request Bhandari Sahab to, for the long run, to prepare a proposal on behalf of public police so that we can take it forward with the government.
Yeah.
Yeah. So
Right, sir. Thank you.
thank you very much. And one more question for Mr. Maheshwari.
Yeah.
As a former banker, what's your recipe for getting over the current crisis? I mean, small-time depositors are faced with. You have been speaking on this. What's your recipe? What solution do you think it is?
For solution for getting insurance or solution for the banking?
You see, my concern is, as a small-time investor, my savings should not be lost. So insurance is a separate thing, but why can't the banks, ensure that my deposits are not lost? Of course, I agree with Mullah Sahab that we can find a way out, way around. But
As
as a
one-time
banker,
solution,
also, yeah, your views on that.
yes, I feel that we should keep our money for the time being with only public sector bank and private sector bank. Keeping money with the cooperative bank has got its own risk, and for getting just higher rate of interest, one should avoid cooperative banks unless they know the person very well. That is one thing. And secondly, as my predecessor has rightly said, we can have accounts in 3 different mode: in the single name, in the name of husband, wife, in the name of husband and children, like that way, so that we can save it. Experience shows that public sector bank, there have been no failure so far, and the private sector bank, the failure have been very, very rare. So let us keep our money in that extent also, and we should continue with our efforts with the government to raise this limit of 5 lakhs to at least 25 lakhs, so that rather than 92%, we can have 96 or 97% of our deposits safe.
Yeah, thank you. Now coming back to Sri Devdatta ji, Now, based on these discussions, how much do you get assured that in future we'll, as investors, small-time investors, are not taken for a ride?
I was listening very, very carefully to all the eminent personalities who are in the webinar. One thing I would like to tell, that you cannot compare Indian economy with of other countries like US, where there is social security. We don't have any social security. So, and in India, it is a very common practice to make small savings. Even the housewives are making small savings. Even when we were children, and even our children, uh, they are having their money in the gullak. So it is our tendency to have money saved, and it is well said that money saved is money earned. So we cannot compare ourselves with the other countries' economical conditions. So in India, uh, after just listening to all the eminent personalities, I'm not going into any figures. So rightly, Mr. Bhandari has said that when there is a will, there is a way. So we must approach RBI and the finance minister to find out a solution for getting entire amount, not 25 lakhs. What I would go to the limit, unlimited amount of the depositor, which is deposited in the bank. So it must be ensured by the bank that this money
Thank you.
is safe, and whenever a deposit, hello,
Yeah, please
I
continue.
would request Mr. Bhandari to make a note for the government so that we can make out a way so that our money, which is deposited in the bank, is safe and secure. I'm
Yes.
not going to have anything for the cooperative bank, because in cooperative banks, there is a lot of political pressures and local pressures. So we cannot, and RBI has recently started to regulate cooperative banks. But as a secretary banking, I have seen in Uttar Pradesh and in other states also that cooperative banks, God knows better about them. So I'm not exposing any cooperative bank, but as you know, that cooperative banks are under the great influence of political leaders, especially the local people. So this is my submission.
Right, sir. Thank you very much. And of course, there is some time left for some question answers. Here I find a question in the chat box from Mr. Anand Shukla. But honestly, the question is not clear to me. So I'll request him to come up with his question. He can speak his question out. Mr. Anand Shukla, the question is not clear. If you could, ask the question, so maybe the panel would be able to reply to the same.
Sir.
I think we have lost Mr. Shukla, or maybe he has dropped out.
Sir.
So, Sir, I have another a very broad,
Can I have
broad observation.
Yeah, actually, what we'll do now.
Sir, can I have one question?
Pardon? Mr. Acha, Sunilji, yeah, a quick one before we wrap up. Yeah, please.
आप लोग के यहाँ पर क्रेडिट सिस्टम जरूर है, बट क्रेडिट सिस्टम रहते हुए भी डिपॉजिटर्स के पैसे until the time the registration is not cancelled or your certificate is not surrendered, the depositor are not able to get the money. In that connection, आप क्या कहना चाहते हैं? क्योंकि RBI को उसको जब कोशिश करता है मर्ज कर दूं, लेकिन उस दौरान 1 साल 2 साल 3 साल लग जाते हैं और डिपॉजिटर्स को बहुत परेशानी होती है. Can you tell with your experience?
बाबू साहब एक मेरा क्वेश्चन है
ये राकेश जी, हम बीच में मिस किया। मैंने एक सवाल आपसे भी पूछा था,
यस
शायद आप निकल गए थे उस वक्त। The role of the chartered accountant in the window dressing. But I'll come back to that. Pehle, my request to the panelists is, can somebody answer Sunilji's question? I mean, who would like to answer?
We didn't get the question correctly. What was the question?
Question is this: depositors के जो पैसे होते हैं, until the bank is certificate or registration is not available, वो आपको credit insurance से नहीं मिलता, और उसके अंदर कम से कम नहीं तो 2 से 3 साल लगते हैं। डिपॉजिटर्स का इसमें नुकसान होता है और उनका कैसे भला हो सकता है?
You see, we have some of the
Question is, I think what I have understood that, generally, even if people get their money back through the insurance, the current insurance scheme, it takes 2 to 3 years, and in the process, people lose their money and the interest also on that. What is the solution for that?
Yes.
See, as far as DICGC is concerned, the day it is felt that the bank is unable to pay, for example, let's take the example of Punjab Maharashtra Cooperative Bank. Now, that time the deposit insurance was only up to 1 lakh rupees. So up to 75% of that money, that is 75,000 rupees, when it is declared that bank is unable to pay, bank has the Deposit Insurance Credit Guarantee Corporation pays 75% of the insured amount. That time it was 1 lakh. So 75,000 was credited to the accounts of the people immediately. So it takes between 3 to 6 months. The balance 25% is given when all assets and liabilities of that bank are transferred to DICGC or a person constituted by them. So it takes time, like any insurance company. If you insure anything with, let's say, any insurance company, people have to come and see whether actual loss has happened. So it takes slightly time.
So for the present, there is no solution.
But I have a very interesting observation, Vaklu Sahab. It is always better to take a contrarian view. We have highest regard for Devdatta ji, and his experience is invaluable. But I have a question. When right from 1969, not a single individual or company or anyone has lost any money in public sector bank, as our friend Mr. D.D. Maheshwari ji also said. And from 1980, not an individual, not any company, not any person with any amount has lost any money in private sector. Then why we need insurance for that? Yes, cooperative bank, which people are losing money, are the person who should need insurance. But both Mr. D.D. Maheshwari and our esteemed Mr. Devdatta has said that please don't put money in private cooperative bank and don't get allured by higher rate of interest. So my submission is, while notionally we are thinking that by giving an insurance of unlimited amount to public sector bank and private sector bank, which according to Mr. Bhandari ji is practical, but we will be creating an organization which will charge its fees. So someone has to pay fees, because there can never be a free lunch. If bank pays, they will pay lower rate of interest to us. If we pay, we will get lower amount. So we should emotionally feel that what has not happened, any loss has not happened in public sector or private sector bank. And God willing, India is a great country under a great leadership. There is no possibility of loss. So why should we worry? Let's be happy, put our money in public sector bank, private sector bank, and forget about this insurance.
Right.
Mr. Vaklu, I want 1 minute.
Left with about 2 minutes to conclude. So what?
I just want half a minute.
Okay, just half a minute. Okay.
Just half a minute. Mr. Malla has been saying that we have not lost money in the public sector bank deposits as yet, because the government has been financing them. It is again the exchequer's money. Government has insured all the public sector banks. Whenever they run into huge losses, the government comes and infuses new equity in it.
Fair enough.
So
Good.
the
What is
depositors have
wrong
not
in it?
lost. No, nothing
what is
wrong. Therefore, I say that if the government can insure public sector banks, let them insure the private sector banks or the cooperative banks also. Number one, and the second small point is that if they can't do it, let the Reserve Bank of India say that no cooperative bank will accept more than 10 lakhs rupees deposit from any individual.
That's a good
Right,
point.
sir. Thank you. I mean, now I think just a quick half a minute concluding session from everybody. But before I do that, I would like to point out what the highlights of today's discussion have been.
May I have a word, please?
They'll be included in
May I
that.
have a word, please? I'm sorry to interrupt you. Because I was invited by Mr. Rakesh Maheshwari,
Yeah,
and I had extensively explained to him, because I also watched the earlier session, which was telecast on APN Live. Actually, I don't know, with due respect to all of you, how come that you have not paid attention to the currency note? Every currency note carries a light on the right side top hand. If you take out any currency note, guaranteed by the central government. So where is the question of lack of safety of our money in the banks? What we deposit as fixed deposit, it is only receipt of our money which has been placed in trust with the bank. So we are 100%. If the bank does not pay, which with due respect to Mr. Malla Saab, every bank makes the depositor run from pillar to post, and they give, even after 40 years, even despite Supreme Court order, they do not give. Mr. Maheshwari is sitting here, of Bank of Baroda, ONGC had to go to the Supreme Court and Calcutta High Court to get the Bank of Baroda license cancelled because it did not pay the depositor money of ONGC to ONGC on maturity. And RBI was very happy to direct RBI, the Supreme Court was happy to direct RBI, yes, go ahead and cancel the license of Bank of Baroda. Immediately within 24 hours they paid. Is that banking? Is that safety? I can give you a live example, and Mr. Rakesh Maheshwari knows. 500 crore rupees of his NRI is not paid by Indian Bank, despite Supreme Court order. So we have, I'm sorry that I'm speaking at the end. Next time, kindly invite me and let me speak in the beginning.
Oh, sure, Mohanji. Actually, this is a huge topic. Maybe in the next panel session, we'll invite you.
Please.
And of course.
And I will save you time. Because there is no need for insurance. Absolutely no need. In fact, there is a IBC code. If you see section 3, rule subsection 7 and 8, it says if a bank fails to pay, like in the Bank of Baroda case, then you can come and knock on the door, and unfortunately today Mr. Justice Serawat is not there. He would say that in the case of Diwan housing, this provision was implemented.
Sir, there is
nationalized banks, their license should be cancelled because Mr. I think Mr. Bhandari said very rightly that it is a misunderstanding that nationalized banks are holy. No, they are the biggest cheats.
Sir, actually, the issue is, I agree with the currency note. The guarantee is for the right currency, not the fake currency. But when it comes to bank deposits, there has been a move recently of allowing the corporates, I mean, that has not rectified as yet, to have their banking system. And if everybody deposits their money there and tomorrow they fail, that means you and me will be paying for everybody else.
No, it is a sovereign guarantee.
Sovereign guarantee cannot be given because it's my money, which gets paid to somebody else.
No, sir, no. I think we are running short of time.
Government cannot print notes.
No, I'm not asking for printing of notes. No, I am a practicing Supreme Court lawyer. I understand what it is, and I'm specializing in banking law. So next time, when we have more time, I will give you the complete history of 2,500 years. How from coins we got these notes. I will give you. And it is not a case of failure of a bank. It is a case of failure of the government of India.
Right, sir. Maybe we can have a discussion on that next time.
Please.
Yeah,
It's a
yeah.
big
Next
topic
webinar,
in
we
itself.
can also declare.
And this time, I think because we are already run out of time. In fact, we have exceeded the time by 5 minutes. I would like to sum up what was discussed today. Of course, one is that Mr. Bhandari will give us a roadmap, a document on how the deposits can be insured in a commercial framework. That's one thing. And second, the regulator can also be requested, or told to leverage on technology so that the banks don't fail as they have been failing, and the public money has to be used to bail them out. And third, of course, which we could not fully debate, whether there is any need for any legislation or something to ensure that people's money is safe. And of course, so far as the reducing, rates of interest are concerned, probably with the economy picking up, things will improve. And of course, a short interjection by each panelist on, as a concluding remark, I would request everyone to, I'll start with Mr. Devdatta. Devdutt ji, aap hain kya? I think we missed on it. He has dropped out. So I'll request Mr. Juneja to give a half a minute of concluding remark. Mr. Juneja, or we can continue with Mr. Malla.
Yeah, thank you very much. I must compliment all my colleagues and especially Mr. Vaklu for conducting this very beautifully. Very interesting thoughts have emerged. I'll only suggest that please don't use the word failing banks, because in India you don't have failing banks. There may be temporary problem, and but we don't have failing banks. One should see globally what happens in the globe. So we are a great country, having great people, a great administration, and looking at positive things. I think we have a very bright future, and such eminent speakers, when they discuss, we can really come out with brilliant ideas. So my compliments and thanks to everyone for doing a great job.
Thank you, sir.
I just take 1 minute. I thank Vimal and our CEO of the Public Police Forum, Mr. Rakesh Maheshwari, for such a wonderful webinar. And in future, I wish only that should continue this webinar. It is a very educated, and we must try to pass out a law in the coming budget session of the Parliament through Mr. Bhandari and others, that our real 100% protection to all the depositors on their hard-earned money, including Mr. Mohan Shandelia was talking. I know he's also trying hard, but best luck to all and keep it up. Thank you. Wish you all very, very happy in 2021. God bless you.
Thank you.
God
sir.
bless you.
Thank you very much. And now, Mr. Bhandari.
Again, what Mr. Malla said, we are optimists. We think it is in the interest of the country and its citizens that we continue to remain a saving-driven economy. And all that we are discussing is in that context only, that we want to encourage savings. And savings will be encouraged and put to productive use if you guarantee their safety. And therefore, the whole context must be understood, a whole discussion must be understood in that context.
Thank you, sir.
We want India to remain a saving-driven economy and not a credit-driven economy like all other economies are.
Thank you, sir.
But
Now,
thank you, Mr. Vaklu, for conducting the seminar. I think we perhaps need another session also
Sure.
to crystallize our views.
Yeah, we'll do that.
Yeah.
Thank you, sir. And of course, we expect that document also from you. We'll be in touch. Thank you very much.
Thank you.
And now, of course, Mr. Maheshwari.
Thanks,
Mr. D.
Bimalji, and all other participants. Today's webinar has been quite useful and interesting, and we could share each other's knowledge, and it is good that Bhandari ji has taken an initiative to prepare a document so that we can take these things further. At the same time, we may approach the regulator to have more vigilance on banking sector, especially on the cooperative banks. Thanks a lot for the active participation, and wish all a very happy New Year 2021. Thank you all.
Thank you.
Thank you very much. And of course, before we conclude, Mr. Rakesh Maheshwari was supposed to give his point. I'll request him to take about half a minute to mention his point as well.
Thank you, Mr. Bakru, for conducting such wonderful webinar. And I think that we should continue as a series of this webinar on the different, on this subject particularly, because it is a very big subject. As said Mr. Malla, the banks have never failed. From 1980, the private sector banks never failed. And 1969, the public sector banks. What we want from the government, if the banks are not failed and the government is ready to console them, to bail out them, then they can say this to the depositors that no bank has failed, and we will try that no bank should be failed. And these words will ensure to the depositors to safeguard their deposits. Why they will have a sleepless night. And as far as Bhandari ji has said, he is a very learned person, and Mr. Malla has said that nowhere in the world this 100% deposits are not safe. But as far as my information, there are 3 countries, Japan, Mexico, and Turkey, where the 100% deposits are secured. We can study them, how they are safeguarding the 100% deposits of the public, and we can discuss it with our government also.
Yeah, actually,
Yes. One thing I want to also say.
Yeah, thank you.
I have read in the Economic Times that the government is planning for a asset management company where the NPS will be transferred to them, and they will talk to the ARC, asset recovery companies, and the IBC, and they will go to the debt recovery tribunal. It is a window dressing, total window dressing. Banks balance sheet will be clean, and all NPAs will be transferred to the asset management company, which should not be done. It is a total window dressing by the banks. And we should also discuss about this in the next.
Actually, this is a topic which maybe we'll discuss next time, because
You see, that's why I have
views on this as well.
Yeah.
So we'll take up this topic next time.
Yeah.
So on behalf of the Public Police NGO,
I am really thankful on behalf of the Public Police. Is doing very well, and the eminent personalities are in the Public Police. And Happy New Year to all. And thank you, Mr. Bimal Basu, for
thank you. Thank you very much. On behalf of the Public Police NGO, we shall send our recommendations to Government of India and also to the RBI. I would like to thank all the panelists, Shri Devdatta, Shri R.M. Malla, Shri Vinod Juneja, Shri K.N. Bhandari, and Shri D.D. Maheshwari for agreeing to be a part of this webinar. I would like to thank the organizers, including Mr. R.K. Maheshwari, for initiating this webinar series. I would also like to thank all our participants who took their time off to be a part of this webinar and make it an interactive and lively session. We look forward to being with you with the next webinar sometime later this month. thank you for being a part of Public Police NGO. Thank you very much.
Thank you very much. Thank you very
Thank,
much. Thank you very much and a very happy new year. God bless.
Thank you.
Thank you.
Thank
Thank
you.
you.
Everybody.
Thanks to everybody.
Thank
Thank you,
you.
everybody, and happy new year.